Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about the major news as far as economic indicators that came out this week. We talk about what they may mean for the stock market and look at the charts real quick in terms of getting an idea of where we are in the cycle and whether or not we should do anything stupid right now.
Stupid.
Stupid.
Two Super Guys Trade Stocks.
We had a lot of crap that actually happened this week. We already did a separate video talking about
Yes.
Google and Meta and some major tech cap like stocks earnings, but we also had the Federal Reserve met. My man Jay Powell came out and slammed us with another 0.25%, man. Another goddamn 25 basis points. This is the highest the Fed funds rate has been since 2001. That's nuts, no?
And, well, I mean, yes, but necessary because we printed, I can't remember the number, a gross amount of money.
30, 40%.
Something like that. And he left the door open to either September or November, another rate hike, probably the last one. The funny thing is you read all the analysts and economists who are like, "Oh my God, he raised it," and it's the same shit every month. He hasn't changed his story for like a year. I don't get it. I don't understand why there's a surprise. It's like it makes me lose faith in that completely.
Immediately after this, they're saying this is the last one, is what the market is basically saying right now. It's like, oh, we're done. But he's saying, like, we'll take it meeting by meeting. I'm going to make a little point about that towards the end of the video by showing you a little chart of kind of like what I think is going to be the struggle going forward with inflation. We have seen it come down a lot, 9%. It was the peak for CPI. It's moderated down a little bit, so we're headed in the right direction. However, Powell talked about how PCE is a better guide. That also came out this week, so we're going to look at that number. But as far as we had another major economic data point come out, we had Q2 GDP, gross domestic product. How healthy is the American economy? And we came out ahead of expectation. They were only looking for about 2%. We came in like 2.4. We came in pretty hot as far as the actual economic output. So the economy is still growing. You see this on a functioning basis. Every time I go shopping with my wife, I mean, Jesus Christ, there's like 800 million people out there lining up to buy the same piece of crap at every freaking store we go into. Have you ever been to Marshall's or TJ Maxx? Because holy crap.
Target. Still Target.
Yeah.
I'm actually, Target's getting more and more attractive. I kind of want to buy it.
Yeah, interesting. Okay. We could do a separate video on that one again because I guess they have some inventory issues. But overall, American economy is still looking pretty well. So PCE, this is Powell's go-to inflation gauge, personal consumption expenditure. And we had the most recent kind of data drop to come out here for June 2023. 3% comparison, right, from a year ago. That seems like not too far off from the 2% that they want. But it's started to lie because the headline number has come down a lot, whereas core PCE, which is the stuff that you really need on a monthly basis, has remained at an elevated level. If you actually look at that chart, we're looking at this. So PCE excluding food and energy, 4.7, 4.6, 4.6, 4.6, 4.4, 4.1. It has moderated, but it's at a higher level now than the headline number. And it's been still, unfortunately, very sticky, right? It's taking a long time to come down. What I think we're going to see here, unfortunately, is we made great inroads, right? We got from that 9% down to this low single-digit territory, 3-4%, somewhere in that ballpark. But we're going to have the last bit be the hardest bit. You remember the word from math back in the day, asymptotically?
Ooh, a long time ago. Very long time ago.
So that's kind of like my anticipation here is that, we made great inroads, bringing it down from 9 to 5, right? But as we start to approach that 2% target, it's going to become a more and more trudging kind of, realization that we're coming back towards a more, reasonable level of inflation. So it's going to require more effort to get that last little bit out of it than it did to get the first big chunk out of it, right? That's what I think is going to be the struggle here. So this may last longer than we originally thought. I was kind of hoping this would be over quick, Dylan's first marriage, but that's a separate story. I know.
I've been married 3 times. Correction. I'm just kidding.
Yeah, all to the same woman.
I have a question before I show the chart.
What's up?
I know that they do excluding food and energy, but food and energy are still increasing, correct? From what I was looking at, or moderating, still way too high, but moderating the increase, correct?
Yes. The reason why they do that is because it's a better gauge because those things tend to fluctuate a lot, right? I mean, energy is traded 24 hours a day practically, where people are trading that. And food really depends on growing seasons and kind of There's also another metric where you can look at as people make a shift from one item to the other. If like beef becomes more expensive than chicken, if people buy more chicken, that's the same kind of idea. So they're a lot harder to track, but they are always necessary for everyday life.
Yeah,
And
that's the part that I'm talking about. Because like if you look at
yeah,
the USDA Economic Research Service, they're saying all foods expected to increase 5.8% for 2023. It just keeps on getting higher and higher, and food and energy are the ones that impact the American consumer the most. It's not even close. Like when you go to grocery stores, our grocery store bill is so much higher than it was 2 years ago.
mhm,
Like so much higher. And
yeah.
I'm not buying anything different. I'm pretty cheap.
Housing is still like the largest portion of it, and then you also have like the non-housing services sector. We still have seen wage growth. We still have seen inflation within, basically salaries. That's where part of this is still coming from. Is that people are woken up to working for more money, right? And they're unwilling to work for less anymore, which I understand. So you're still continuing to see the non-housing services edging forward ever without actually having a major reduction. We have seen goods inflation come down quite a bit, right? Because now you can get a TV pretty damn dirt cheap.
Yeah, yeah,
That slowed down, and cars are coming down, that sort of stuff. But you're still seeing a lot of the services related inflationary pressure is continuing.
right. So this is the Spider Select Energy Fund. So it's not a stock. It's just like energy as a whole, a bunch of companies. You can see that we're actually coming up to a little bit of a head here. So last time we hit this level, we went down quite a bit. Then we hit it again. Then we went down, and we're approaching it again. So it is just something to keep an eye on. XLF. Oh, I'm not. No, hold on.
Well, part of that's going to be affected by the weakening U.S. dollar too. So
Yes.
you will have a little bit more, I guess, pressure for the commodity to go up, because it's denominated in dollars, right?
Yeah. And then what this was kind of interesting to me. So this was this whole bank, 3 banks closed from like here to
Yeah.
here, and it was a little bit of a nightmare. This is the Spider Fund for Financial Services. The entire thing is almost back up to where it was before this whole thing happened, which is
Yeah.
pretty wild. So let's look at the SPY real quick. Honestly, the volume, it doesn't really matter. It's not crazy high, or there's no really anomalies, but it's just not breaking this 20 moving average, and it's holding this 9 moving average just repeatedly. We're just on a
Yeah.
never ending train upwards. And then, of course, you got your cues.
Mm.
Let me scroll out here.
Figuring Out Money was arguing for that large red bar to be basically an engulfing candle that could be like a 2-bar reversal pattern was his thesis. I don't know if I buy it. I've had a bearish bias for a while, but
This?
still, I'm like, yeah, that was his argument.
Okay, so who cares is the correct answer to that. So let's just real quick. Oh, here's another one. Oh, it didn't matter. Oh, there's kind of one. It's technically not engulfing. Here's an engulfing
Yeah,
one. Oh, it didn't matter.
yeah,
Where's another one? Oh, here's another one. Oh, who cares? So that works for small term trends, like 5 or 6 days. And also for that to be more successful, just so you know, you're supposed to be a lot higher from the 9 moving average. You're supposed to be extended. And then that usually shows that you have a minor correction where it either hits off the 9 EMA or the 20 EMA on a daily chart. That's
yeah.
trading, but the economy doesn't give a shit about this chart. Like they're
No,
not
no.
looking, they're not like,
Economy's
oh
not.
man, we hit a bear engulfing candle. Nah, we got to decrease our
Yeah,
GDP.
yeah. Jay
No,
Powell's going to sell a second house.
yeah, not a thing. It's daily chart is it's more a wide look. I don't ever. It would make more of a difference if like this bar was like way up here, then I'd
Mm,
paid more attention to it. But it
yeah.
happens all the time. It's bull crap.
In,
It's
in
just
fairness,
finger
too,
content.
in reference to the XLF thing, we should probably do a separate video about your bank returns, because that was some sexy numbers that you
Oh
screenshotted me.
yeah, yeah, pretty dope.
Yeah.
I can show it right now. So we had did a video. Um, Nah, it's kind of hard to show. I'm like up 100%. We'll do a different video on it. It's,
That's amazing. I love it.
yeah,
Nothing like the 100% winners, man. That's awesome.
yeah.
Congratulations.
All right, guys. Let us know what you think, and we'll do that DPST video later. Have a good one.
Yeah, get to the next one.